What if there was a standalone dividend growth ETF that has a long-term history of not only paying consistent dividends, but is also tax efficient and has even beat the overall market during many different time frames historically? Well, the amplified Divo ETF is that and much more. In this video, we are going to explore the reasons why the Divo ETF is an amazing all-in-one ETF to hold in your investment portfolio, especially for dividend growth investors out there. We're going to look into Divo's key features, investment strategy, and the potential benefits it brings to an investor. Now, whether you're a passive investor seeking long-term growth or more of an income-focused individual like myself, looking for reliable dividend payments on a monthly basis, the Divo ETF aims to cater to a wide range of investment objectives, and we are going to go through all of it. Right after you, please drop a like in this video and subscribe for more content like this in the future. So heading over to the Amplify ETF's website, it says why invest into Divo. Income potential, comprised of high-quality dividend-oriented stocks along with covered calls on individual stocks. Active management allows the portfolio manager, the CWP, to identify opportunities and risks and act on those decisions in real time. And Divo seeks to lower volatility. Dividend and option income may provide lower share price volatility versus the overall market during times of broad-based market declines. Divo's objective and strategy. Divo is an actively managed ETF of high-quality large-cap companies with a history of dividend growth along with a tactical cover call strategy on individual stocks. Divo is a strategy designed to offer high levels of total return on a risk-adjusted basis, and it's done exactly that. Now, looking a little bit closer into Divo's overall historical performance, since the fund's inception in 2016, Divo is up around 41.58%. Now, Divo does have an expense ratio of 0.55%, which is obviously on the higher end of some ETFs, but for an ETF with this type of strategy, it's pretty much industry standard and honestly not all that alarming. Now, Divo does offer a well-diversified portfolio with some of the biggest and best companies in the world, and of course, on top of that, Divo does have a cover call option strategy, which does hedge against some downside risk, but also caps a portion of the portfolio's upside potential. Divo's holding breakdowns are healthcare at 16.99%, financials at 16.62%, consumer defensive at 14.84%, industrials at 11.54%, technology at 11.28%, energy at 10.87%, consumer cyclical at 10.37%, utilities at 3.35%, basic material at 2.13%, and communication at 2.03%. Cash and equivalents are at 11.21%. Now, Divo's top 10 holdings are Invesco's short-term government agency at 11.02%, then Microsoft at over 5%, Visa, Procter & Gamble, Johnson & Johnson, McDonald's, United Health Group, Chevron, JP Morgan, Merck, and others. Overall, there's 35 holdings in this portfolio, so it's not the most diversified portfolio in the world, but like I said earlier, it does have some of the largest, best companies in the world as far as historical performance, and of course, has the option overlay for some extra protection. Now getting into some of the fun stuff, Divo's dividend yields. So the trailing 12-month dividend yield has been 4.77%, and Divo does pay around a 14-cent dividend on a monthly basis. Now, I personally love stocks and ETFs that pay out on a monthly basis because it allows me to get more cash in my portfolio quicker in order to pay for bills with the money, or of course in order to reinvest into more shares of different stocks and ETFs, which is what I'm personally doing as of right now. But looking at Divo's history, it's paid, like I said, right around 14 cents per share or so on a monthly basis over the last several years. At times, the payouts have been a little bit higher, closer to 15-16%, but as of recent, as an investor, I'm expecting around 14 cents or so per month. Now, this of course brings up the topic and maybe the question, does Divo have any sort of dividend growth outlook in the future? And with this type of fund, the strategy that it employs, it's not likely going to have any sort of insane dividend growth in the future unless the strategy changes from here. But as an investor, I'm not necessarily expecting to have any sort of large dividend growth. Investors are more so buying into Divo to have a consistent dividend paid on a monthly basis, and on top of that to have some decent sized overall price appreciation for the ETF price long term. Now with both of that, with the dividends paid and of course the ETF raising in price over the past various years, how has Divo performed next to the S&P 500? As of right here, you can see the total return for Divo versus the SPY, which is the S&P 500, over the past 1,824 days, which is around 5 years. Divo has returned 65.44%, where SPY has returned 73.94%. Now, even though the S&P 500 has beat Divo by a tiny bit over the past 5-year time frame, you can still see for the most part that Divo tracks the S&P 500 more or less pretty closely, but because of Divo's option overlay, some of the upside potential is going to be capped, so it's going to be tough for Divo to actually beat the S&P 500, although on certain time frames it's been very, very close. Like on the last 3-year time frame, Divo has returned 43.02%, and S&P has returned around 45.23%. So overall, it's really just going to need to depend on what the specific investor is looking for. If an investor is looking for consistent monthly income paid with an overall diversified portfolio with some of the best companies in the world, the Divo ETF could definitely be a good option for them. Now, the last thing I want to go through when it comes to the Divo ETF is this page right from their investor guide. From their website, it says the advantages of income-producing equity investments. Demand for these companies extend well beyond risk and return. Here are some additional reasons why investors continue to seek out dividend-paying companies, along with investment that generate income from conservative strategy of writing call options on positions already held in the portfolio. So with this, we have predictable income. There are thousands of companies that pay monthly or quarterly dividends and may have a track record going back decades. Not every dividend payer is worth owning though, of course, but the sheer number shows that the desire for income is ongoing and has definitely been growing in the past, it seems. It also says protection against inflation. Fixed income products expose investors to interest rate risk. Fixed payments lose purchasing power in inflationary environments, but companies can increase dividends, and based on an average of all rolling 12-month periods since 1940, dividend growth has exceeded inflation by an average of 2.4% per year. So obviously it's very hard to beat inflation, but invest into certain high-quality dividend payers that have a history of dividend growth can definitely help fight against it. Now also drives total return. According to the S&P Global, dividends have been responsible for 32% of the total return of the S&P 500 index since 1926. Adding a conservative covered call rating strategy overlay has helped the potential to help drive total return. And lastly, when it comes to dividends, let's talk a little bit about the tax treatment. Dividends paid by U.S. corporations or qualifying foreign equities are taxable to investors at rates ranging from, of course, 0 to 20%, rather than the investor's marginal rate, depending on taxable income. And with Divo specifically, we might want to go over this all in a different video. Comment down below if you guys want me to go through this. But the way that most of Divo's dividends are taxed are very favorable for investors like myself and likely even for you. But I want to hear what you guys think down below about the Divo ETF. If you're a dividend growth investor out there, is this an ETF that you would invest in or at least look into? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks as always for stopping by, guys, and I'll see you in the next one.